Morning. How you doing, H? Both in different
Good
locations?
mate, how are you?
Yeah, good.
Yeah, mate, I'm over in Hanoi. I've just had a few days with some traders over here, sort of discussing the market and trading strategies, and obviously watching the goings on with the US and Iranian conflict.
How's the fuel situation there?
Mate, it seems pretty good. Big lines at the service stations, but
Mhm.
with the amount of bikes here, I think there'd be big lines no matter what.
Yeah, right. Yeah.
Yeah.
Interesting week in the market too.
Yeah, there was obviously a very strong recovery after the ceasefire was announced. Possibly looks like we've maybe bounced a bit far, as we were talking about before. Just concerns over the lagging effects of the high oil price. The strait hasn't reopened, and I don't think it's going to just reopen in one go. So oil's going to remain high for the next couple of months. Definitely.
Yeah, and look, even when it does open, the ships aren't going to fill up overnight. They've got so much capacity, so limited capacity anyway. They've got to repair the refining places anyway. So this hangover is going to last for quite a while. So I think the market well and truly got ahead of itself yet. And with some of the indicators starting to come through, we'll get a better feel in the next week or so about what it really means. But yeah, I think we've got a long hangover on this one.
Yeah, definitely. And maybe we can have a jump on the chart you've put together, and we can start to have a look at that.
Yeah, I think it's worth a quick look at this chart that was actually in the Fin review this morning. It sort of summed things up pretty well there. I'll just get that up on the screen. So yeah, this was in the Fin this morning. It just shows consumer spending projections for the next quarter, and you can see it's pretty much all in essentials. All the discretionary stuff's gone. With the
Yeah,
flow on impact to growth and all the rest of it, people tightening their belt, well, you can see what sectors of the economy are likely to outperform for the next quarter.
yeah, definitely. You'd certainly worry about stocks like a Harvey Norman, any of that discretionary retail would probably see a sort of pullback in their activity. Um, but that drop in the GDP forecast, I think, is a very big one. 0.8% downgrade is a big drop, isn't it?
Yeah, there was another story in the Fin this morning where they're coming out with their forecast next week, and it was like a warning: don't expect good news. So yeah,
Yeah,
and I think that's globally, not just Australia. But you can see on that chart there, the likes of the utilities, the groceries, and the healthcare sectors, where they're either essentials or they can actually pass any prices, they can pass straight through. They're the
yeah,
sectors that we probably should be looking to start thinking about moving into over the next little while. And I think also if you've had stocks that have had an incredibly good run, now's the really good time to start using the selling calls to bring in that additional income because yeah, the next 3 months in terms of growth, there's only a handful of sectors there that are probably going to outperform, given the rest of them are going to do it pretty tough, I think.
yeah. Look, I think that's some good points. I think we mentioned Woolies and Coles have had very big run ups, and obviously they are projected on that report to continue to perform pretty well. But I would start to question if the valuations that we're seeing them trading at present are justifiable going into this slowing economy.
Yeah, I think if you start to sort of pullbacks in the likes of Coles or Woolies, it'd be a reasonable time to start accumulating a little bit more or start averaging in with them. Utilities are the same boat, like APA's up 12-month highs at the moment. It's sort of fluctuating around. I think if there's a pullback there, you'd look to get in there. It pays a great dividend as well. So it's not a
Yeah,
bad time to have a good review of your portfolio and start thinking about what does the next quarter actually mean. I think we're moving into a slightly different phase of economic growth or economic movement, if you like, or different phase of the economy. So it's a good time to have a think about rebalancing some of your holdings, I think.
yeah. Good point.
Yeah.
And what else do we have in our
So
chart
I'll
today?
start QBE up here. If you have a look at the chart on the left there, it's gone way through its technical indicators. It's well and truly past its 12-month highs. I think if you bought it, we were recommending it back down here, if I remember rightly, H. I think if you did buy it down there, you could certainly be looking at selling some calls. I had a quick look this morning. I think a dollar out of the money, so around that 23.50 mark, you're going to get about 30 cents in premium for selling calls. So it sort of stands out as one you could think of. I mean, it's in the middle of its price targets there, but it's not far away from its average. Selling them at 23.50, you're pretty much at the average. So, and you could certainly look to be managing that over 2 or 3 months. So it's one that I'd be looking at if you owned it and bought it way down here somewhere.
Yeah, definitely. Look, it's one we did play off quite a bit. I think we wrote some puts for a few clients to get into it. I've written a few covered calls, but definitely, I think at these levels, if you're not liquidating the stock, you'd certainly be writing some calls.
Yeah, for sure. The other one I put up here was Woodies, and these are yesterday's numbers, but as you can see, it's had an incredible run up as you'd expect. It's probably going to continue to do very well in this sort of environment. I mean, oil shortage isn't going to go away. Natural gas shortage certainly not going to go away in a rush, so they're pretty well positioned. But I think if you bought it down here and you own a few of them, I had a client that sold calls over half their holdings, not all their holdings, last week. And
Yeah.
with this pullback, it looks like it'll expire worthless, and we'll do the same thing again next week. So it's another one, depending on how many of them you own, it's another one you could look at. I mean, as I said, in this environment, you want to be trying to get as much income as you can from other strategies around the stock market. So it's another one you could look at, particularly if you bought it down here somewhere.
Yeah, definitely. And I think if you did want to buy the stock, I'm probably more a buyer sort of sub 31 to that 30 to 31 range. And then yeah, look, writing calls on any upticks. We're going to have days where there's going to be jumps in oil as disagreements in this negotiation process go forward, and obviously if ships are stopped for whatever period, so there'll be opportunities to write covered calls, and I think take advantage of that moment of volatility.
Yeah, I think you find with this volatility, the premiums on options is actually really good for selling things around it, and
Yeah,
that volatility is going to continue for a while yet.
yeah, agree.
Yeah, that was pretty much it from me this week, H. And you're back in the office next week, and so am I. So we
Back in
can
the office next week.
catch up
Yeah,
then.
hopefully. We've got bank reporting coming up early May, so that'll be something to watch. Seeing how our home lending market's going. The property market seems a bit mixed at the moment, so that'll probably be sort of the next major thing I think our market will be looking at. So yeah, we'll get onto that at the end of April.
Yeah, we'll move into the banks and start talking about them then. Great. Have
Yeah,
a good one, H.
have a good one, mate. See you
See you
next
later.
week.
Bye.